Hi, everybody. As most of you are aware that the New York Stock Exchange and the Nasdaq are the two largest stock exchange in the world in terms of market cap. Based on Statista, we can see that there is more than 5,000 companies listed on the US Stock Exchange. On the ETF side, there are about 9,000 ETF listed globally. Because of the huge size in the US market capitalization and the number of stocks they have, the US market have been divided into 11 sectors. And this is taken from Finviz, which we call the heat map or call the sector map, where from here we can see the 11 key sector on the S&P. So these are the 11 sector that is on the US market. Besides investing on the S&P 500 ETF like SPY or VOO, or the Nasdaq ETF like QQQ, if you want to invest in the sector itself, there is actually 11 corresponding sector ETF that is listed on the US exchange also. And today I'm going to show you the 11 sector ETF that are listed on the US exchange. The 11 sector ETF I'm going to talk about are the SPDR ETF. There is also a competitor ETF like from Vanguard, from iShares, okay, and even from Fidelity. But I prefer SPDR ETF due to they have the largest AUM and they are the most liquid. Because when it comes to ETF selections, I prefer ETF that has a bigger AUM because bigger AUM will imply better liquidity. And when better liquidity, you indirectly imply that the expense ratios for the ETF will be on the lower side. It may not be the lowest, but you'll be one of the lowest in the market. I'll show you the 11 ETF based on alphabetical order from their stock code. So the first sector ETF is XLB, which is the Material Select Sector ETF. It is following the material sector of S&P 500 index. And they are exposed to company mainly on the chemical, construction, material, container, packaging, metal and mining, paper and forest product industries. So this ETF currently have 28 holdings with a market cap of 84 billion. These are the top 10 holdings for this ETF, with the top company have a weightage of more than 20% to the index. And the industrial allocations where more than 50%, which is in fact 66.72% of the company belong to the chemical industry, followed by the metal and mining, followed by container and packaging, and the last one is the construction material. How does this ETF perform since inception, which is in December 1998? This ETF have been giving positive return as of the end of 31st of August on a 1 year, 3 year, 5 year, 10 year, and since inception time frame. Long-term return is slightly less than 10%. Let's move on to the second ETF. It's called the XLC, which is called the Communication Service Sector ETF. Before 2018, there are actually only 9 major sectors in the US. And as of 2018, 2 more new sectors was created. And one of the new sectors that's created is called the Communication Service Sector ETF. It's representing the communication sector of the S&P 500. And mainly they're looking at companies that are exposed to telecommunication service, media, entertainment, interactive media and services. This ETF, although it's only launched in 2018, it already have a market cap of 764 billion US dollar. It is easily 10 times bigger than the material ETF, which I just showed. And what are the top 10 holdings? The number 1 holding is Meta, which actually have a weightage of also more than 23%, followed by Google, which comprise of close to 20%. And from here, we can see that the top 2 companies, Google and Meta, have more than 40% weightage on this ETF itself. And from here, you can look at the names. Most of them are actually household names, where most of you may be familiar with. And now let's look at their fund industry allocations. 44% are in the interactive media and services sector, followed by entertainment. After that, followed by media, communications services is one of the smallest, we comprise of 10.35. And the smallest one will be the wireless telecommunication services, which only have a weightage about slightly more than 5%. What is the performance of this ETF? This ETF is just launched in January 2018 and thus do not have a 10-year track record. But since inception, it has given an annualized return of actually more than 10%. In the past 1 year, which is an exceptional good year for the technology-related counter, where you can see there's Meta and Google inside, you actually have a very strong performance for the past 1 year. And year to date, you have actually achieved a return more than 20%. And now let's look at the third ETF, which is called the XLE, which is the energy sector ETF. It is mainly representing the energy sector. It mainly comprises of companies that in the oil, gas, and consumer fuels, energy equipment, and service industry. This ETF have a market cap of 194 billions, and you have 22 holdings. And the top 2 holdings have a weightage of more than 40% of this ETF itself is ExxonMobil and Chevron corporations. And Chevron Corporation was also one of the thousands component stocks. As I mentioned, it's an energy sector. So more than 90% of the company in this ETF are the oil and gas consumer fuels industry. And how about the performance of this energy sector ETF? It is one of the weaker ETFs at this current market juncture compared to the rest of the ETF, where you can see the long-term return-wise is less than 10%, and the 1-year return is also less than 10%, where we know that S&P 500 have actually crossed the 20% mark. However, you look at that 3-year annualized return, which is pretty impressive, which is more than 20% return per year. From here, you can see that actually this sector can be pretty volatile, where the swing can be pretty big. We look at the 10 years performance and the 3-year performance is a very, very big gap. Okay, now let's move on to this, the finance sector ETF, which is XLF. It will representing the finance sector, company that in the financial services, insurance, banks, capital market, mortgage, real estate investment trust, and consumer finance. And do take note, it comprises of mortgage REITs inside this ETF, but the traditional REITs will not be inside this ETF. You have a holding of 71 companies, and the market cap is 327 billions. The top holding is Berkshire Hathaway, followed by JP Morgan, followed by Visa. So none of the top holding have more than 20% weightage compared to the previous 3 ETF that I have shared. And the number of holding they have is also more than the other 3 holding, which is why it is more diversified in certain aspects. And the company that are in is 31% will be in the financial services, followed by the banks, followed by the capital market, and then the insurance. Consumer finance, we have the lowest weightage of only about 4.09%. And let's look at the performance of this ETF since inception. Long-term performance is actually less than 10% for the finance sector, but for 10 years, it's slightly more than 10%. For the past 1 year, finance sector have been doing well due to interest rate hike. This ETF will achieve a return more than 30%. Now let's move on to the next sector. It's called the Industrial Select Sector ETF, which is XLI. What does it comprise of? It comprises of companies in many industries, like aerospace and defense industry, industrial commercial grade, marine industry, transport, infrastructure, machinery, ground transportation, air freight and logistics, commercial services and supply, professional services, electrical equipment, construction and engineering, trading company and distributor, passenger airlines, and building products. So practically it comprises of many industries in the market, and it has 78 holdings, which is more than the finance sector ETF. And the market cap, however, is smaller. This is 88 billions USD. And what is the top holding? As it covers across multiple industries and have many holdings inside. And from here, you can see that the top 10 holding is pretty well spread, with the top holding General Electric, followed by Caterpillar, and none of them have more than 5% weightage to this ETF. And the number of industrial across is also very diversified, where the highest weightage is aerospace, which only have 23%, while the smallest one, construction and engineering, have less than 1% weightage. How does this perform over time? From here, you can see that the 3-year, 5-year, 10-year, and since inception, the returns for this ETF is pretty stable. The range is not really that great. On average, it's around close to 10% return on a long-term basis for this ETF. Let's look at the technology sector, which is a sector that pushed up the S&P 500 to a new high in this year, and the stock symbol is called XLK. It mainly invested in companies that from technology, hardware, storage, peripheral, software, communication equipment, semiconductor equipment, IT services, electronic equipment, instrument and components. So any company that have deal with technology, and currently have 67 holding. and it had the biggest market cap, okay, among all the 11 ETF, where it had 1.5 trillion, where the rest of the ETF is only in billions. And let's look at the top holding. The top holding is skewed towards Microsoft and Nvidia, where both of them contribute more than 40% of this ETF, followed by Apple, which only contribute less than 5%. On the industrial side, software and semiconductor are the main dominant industrial allocation for this ETF, where they comprise of more than 80%. The rest will be less than 10% for this ETF. And let's look at the performance-wise for this ETF. If we look at the long-term side, is only around 10%. The recent past 1 year, the ETF has moved up pretty high, and this actually have pushed up their return. But we look at the 3-year return, it is only slightly better than their long-term returns. And in fact, if you look at the quarter to date, based on 31st of August, it actually gives a negative return. As we know that technology ETF is pretty volatile, you indirectly reflect on the ETF performance also. Now let's look at the next ETF. A lot of people call the defensive ETF, which is the consumer staple select sector ETF. The stock code is called XLP. As what we mentioned, consumer staple. So there are many invest in company that is consumer staple distribution, retail, household product, food product, beverages, personal care product industry in the US. So these are mainly more for the defensive side, or more for the day-to-day needs that everyone needs, that type of products. So the number of holding they have is 38 holding, and the weightage is 265 billion. The top 3 holdings will be slightly less than 40% of the ETF itself is Procter & Gamble, PG, Costco, and Walmart. And from this top 10 holding, you can look at it, is most of the company are actually household name, and most of the consumers are aware of them, and there are many defensive stocks. And let's look at the allocation is 33% are under the consumer staple, followed by household, beverages, food products, and personal care, which actually have the lowest weightage of about 3%. What about the performance? The long-term performance is pretty stable. It is a defensive stock. If you look at the 3-year and since inception, this ETF return is slightly less than 10% over the long term due to its defensive nature, where if the market is bullish, you see a consumer staple ETF will not perform that well compared to other ETF. But if the market is bearish, you see the consumer staple ETF will perform better, as most people will run to the defensive stocks for hiding. Now looks at this ETF, which is a very popular sector, especially when interest rates have started to cut. This is called the REIT sector, which is called the Real Estate Select Sector ETF, which is XLRE. This is also a new ETF, as I mentioned previously, that before 2018, there are only 9 sectors in the S&P. From January 2018, 2 more new ETF have been formed, and beside the communication ETF, which is XLC, and this is the second one called the XLRE. As what the name implies, that there are many investors in companies that are in the real estate management and development and REITs, and excluding mortgage REITs. Mortgage REITs are classified under the finance sector ETF. They are not under this REITs ETF. You have 31 holding and have a market cap of 58 billion, which is one of the smaller ETF among the 11 of them in terms of market caps. And the top 10 holdings are pretty well spread, where the top holding Prologis have only slightly more than 10% holding, followed by American Tower, and followed by Equinix, which mainly all these top 10 holdings are mainly the top 10 REITs in the US market. So in terms of allocation, the highest weightage will be on the specialized REITs, which have 44.43%, followed by the residential REITs, retail REITs, healthcare, industrial, hotel and resort REITs, which is one of the smallest of 1.086%, and office REITs have the lowest weightage of 1.01%. And from here, we can see that most of the REITs listed in US side are under the specialized REITs category, which is have 44.43% weightage. And let's look at the performance of these REITs. It do not have a 10-year record, and its 3-year performance, which is one of the lowest among all the 11 sector ETF. One of the key reasons is that interest rate hike is negative to REITs, where we can see a lot of REITs are not performing well, and some even go into negative returns. And this will indirectly affect the REITs sector ETF. But with interest rate started to cut in September, this may be a sector may be able to start to rebound going forward. Now let's look at the last 3 ETF. This is the utility ETF, which is a XLU. It is exposed to companies that are on the electrical utility, water utility, utility, independent power, renewable electricity producer, and gas utility. And utility sector is also in a way as considered as a defensive sector also. Because of their high cost of building it, they are actually also sensitive to interest rate movement. And when interest rate coming down, it may be a positive sign for the utility sector, and that would release an interest payment on their debt. It have 31 holding and it have a market cap of 65 billions. The top holding also did not exceed 20% of the whole ETF itself. As what I mentioned, is utility and electric utility have the highest weightage, is have about 65.98%, while the lowest one is the gas utility, which is only 1.74. So the main dominant industry in this utility sector are the electrical utility and the multi-utility industry. What about their performance? Their long-term performance is pretty stable, as they are also more towards the defensive side, where we can see that the long-term return is slightly less than 10%, but it's pretty stable if you invest this ETF over the long-term basis. The second last ETF, which is the XLV, which is the healthcare sector ETF, as the name implied, it's on the healthcare, so they are investing in companies like pharmaceutical, healthcare equipment and supply, healthcare provider and services, biotech, life sciences, tools and services, healthcare technology industry. The number of holding this ETF has is pretty big relative to the total of the 11 ETF. It has 63, and the market cap is 291 billions. As the number of holding is big, so it's pretty well spread. Thus, the top two holding each will not have more than 20% weightage, as it is pretty well spread among all the companies in this ETF. As for industrial side, pharmaceutical will have the higher weightage of 31.58, followed by healthcare provider, then followed by healthcare equipment. And the lowest weightage will be on the life science, which is 10.66. Biotech have about 16.29%. The long-term performance for this ETF is more than 10% due to the nature of this industry, and it is more volatile on the long-term basis when compared to those defensive ETF like the consumer staple and the utility sectors. Now, the last sector is called the consumer discretionary select sector ETF, which is called the XLY. These are mainly exposed to specialty in retail, broadline retail, hotel, restaurant, leisure, textile, apparel, luxury goods, household durable, automobiles, automobile component distributor, leisure products, consumer services. Number of holding you have is 52, and the market cap is 618 billions. As the name applies, it's called consumer discretionary. It is opposite to the consumer sector ETF. But consumer sector ETF is a day-to-day necessity when you need it. So it is when the market is bad, people still need it. So consumer staple will be more of a defensive side. But for consumer discretionary, when there is an economy downturn, people will tighten their wallet, and thus it will affect the sector. But when there's an economy boom, there'll be more spending. People will buy more car, more luxury goods, and this will be benefit to this consumer discretionary sector ETF. And let's look at the top 10 holding. The top two holding, which is Amazon and Tesla, with slightly less than 40% of the weightage. And the industrial allocations, specialty retail, we have 24, hotel, restaurant, and leisure got 22, and broadline retail got 22. Automobile 18%, household durable 5.19, distributor about 1.15, and the lowest weightage one will be on the leisure product, which is 0.24%. So how does this ETF perform over the long term? 3-year return, the performance is very, very low, as we know that during the past 3 years, interest rates have been hiking, and that's post-COVID period, and inflation have been getting high. Such people have been cutting spending. But over a long-term basis, as the US market is growing, and thus the long-term performance is still pretty respectable. It is near to a 10% returns. Now let's look at the performance of this 11 ETF against the S&P 500 and QQQ, which is the Nasdaq index. Okay, this is based on year-to-date performance as of mid-September. We can see that XLU, the utility sector, XLC, which is the communication services, and XLF, which is the finance sector, they have actually outperformed the S&P 500. And they also outperformed the QQQ. XLK, which is the technology sector, actually have underperformed S&P 500 and the QQQ during this period, because there is a pullback for the technology sector in August period. So we will spread the timeline longer over a 1-year period. you were able to see that actually XLK outperformed QQQ and SPY. Communication sector, which had Microsoft and Meta, and the finance sector, which comprised of Berkshire Hathaway, JP Morgan, Visa, they actually have outperformed QQQ and SPY. But this is only looking at a 1 year time frame. When you look at investment, you also want to invest over the longer term. And let's look at the 5-year performance. And the only one ETF, which is called the XLK, which is a technology ETF, that have outperformed the S&P 500 by 80%. And it also outperformed the NASDAQ ETF by around 30% over a 5-year period. And the rest of the other 10 ETF have actually underperformed, didn't outperform the S&P 500 over the past 5 years period. So this is a summary table of the 11 ETF compared to QQQ and SPY. From this table, we can see that practically over a year to date, 1 year, 3 year, 5 year, 10 year period, this is as of mid-September, none of them give negative return in all this time frame except the energy sector, which give a negative 2.92% return over the 1 year period. And over the long term wise, it is also the weakest that give only a 3% return. But however, you look at the 3-year time frame, it actually the best performance sector, which give a 25% return. It is more than double return compared to the S&P 500, which only deliver 9.5% over a 3-year period. So thus, when it comes to investing in sector ETF, we actually looking at sector rotation play and depend on the market conditions, certain condition that is good for certain sector. And this is where you may want to select a sector at different market conditions. And also, as we know that US is the largest market in the world. And these are the key main 11 sector ETF that is listed on the US AMEX exchange. There is further sub-sector ETF, which I will not cover in this session. That's all I have to share with you today, and hope that it have benefit you to give you a better understanding on the 11 sector that is on the S&P 500. If you feel that this video have benefit you, do remember like, share, and also comment on this video. I shall see you on my next video. Bye-bye.